What's up, everybody? My name is Mark.
And I'm Mo.
You're watching Money Market Truths. Thank you guys for stopping by. First of all, I would like to apologize for last week's episode. I've had mic issues, and come to find out, it's because I had all these stupid filters on the Logitech microphone, and it doesn't work very well with StreamYard. So, my apologies. I will touch a little bit on the inflation reduction bill today because I know a lot of people seem to be interested in that, but my audio was going in and out, so might as well touch on it again this week. But other than that, man, how's everything been with you, Mo?
It's been amazing, man. We had a thesis that things will change in August OPEX, and it did happen. We saw a big drop on Wednesday and Friday and followed through on Monday. So everything is going as per plan for us, and the macro thesis is strong.
Good, man. Yeah, same here. I've been waiting for this sell off, man. I was that bear just sitting on the sidelines, kind of waiting. I would buy a few shares here and there. I'm still buying a few shares here and there, but I've really been waiting for this drop, which I think is coming here soon. So we'll see. But I'm not gonna lie, these past like month and a half on this run up, I felt I was missing out a little bit on some of these run ups on some of these stocks. It was crazy. I was just sitting there like this doesn't make sense, and I didn't execute as much as I wanted to. But now I am very excited that the market is going down. All right, so let's just get straight to the point for the hot takes this week. I'm going to touch on the Inflation Reduction Act, which I talked about last week, but again, due to my audio, there were some issues. But as you can see now, President Biden did recently sign the bill into law, and more people are coming forward now saying that this Inflation Reduction Act will have no measurable impact on inflation. Like I said in the last episode, I was trying to explain to everybody what this bill really is. It's just a way to get people on board with the wording of it because there's really nothing in here that's going to decrease our inflation anytime soon. In fact, when have you ever seen any bill that spends more money to reduce the amount of spending that we're doing? It just doesn't make sense. So today on Yahoo Finance, they had a great article on this, and they were talking about how they have had a few economists who were looking into this, and they're saying that the $430 billion price tag over the next 10 years is a hefty amount of what they consider to be a marginal economic returns. And then they have this really great chart here. Let me go zoom in a little bit further so you guys can completely see this. Let me zoom in. Let me see if that even works here real quick. There we go. It kind of, I love this chart, and I'm going to put this link here in the description below so you guys can click on it. But it shows like how the money is raised and then how it's being spent. And the big takeaway from last week's episode, which I want to touch on, was the increase of tax collection from the IRS, right? So they're planning on funding the IRS a lot more, which will require them to try to get more money from people. Now, I've been listening to a few other YouTubers who may not agree with my thesis that this is not a good idea because the IRS will start targeting more the middle class and lower class. And one of the YouTubers that I follow, which I actually like, his name is Strongman Personal Finance. He is a CPA, and he was saying that he doesn't think that the IRS is actually going to go after the middle class and the lower class. I would strongly disagree. He was saying that, oh, it's why would they go after people who have to pay $100 or $200? But in fact, that's really not what they end up having to pay when they get that proposal. That's what it's called. It's a proposal bill that you get in the mail sometimes if you get audited and there's something that's off. They give you a proposal bill and take all the tax credit off. They take everything off, and you get hit with this big fat bill. And their hopes is that you don't actually fight it and you just pay the thousands of dollars that they may say that you owe. The problem is, like, if you do this with enough people, after a while, a majority of them, I would say, probably would just pay the bill because they're afraid of the IRS, not realizing that it's a proposal. It doesn't mean you have to pay that. You can actually fight it. You could resubmit your paperwork and fix whatever issues that they found or think that you forgot to file, and they will readjust it. And sometimes you'd be surprised, you may actually get money back. But I do strongly believe that they typically go after the middle class and lower class because the average person will not pay for a lawyer to fight the IRS. Where big corporations that have all these tax breaks, they have lawyers on hand that are willing to fight the IRS. And a lot of these lawyers sometimes have actually worked for the IRS, so they know all the lingo and what they're trying to do. But not only that, these corporations, they already know every single loophole that's out there, so the likelihood of them making mistakes is pretty much slim to none. Whereas our middle class and lower class, we go to H&R Block, which are really just overnight trained, I guess, tax accountant for a short period of time. They're not even a real tax accountant. They're just a like regular employee at a Walmart that gets trained up for 30 days or so. It's probably online these days. Last I checked, it was in person for like a week. And then it just basically just type in and follow the prompts that show up on the screen, just like taxslayer.com or TurboTax. It's exactly the same thing. And a lot of people make mistakes using those programs because they're not familiar with all the taxes and the tax codes and et cetera. That's why I'm a real component that if you have any sort of asset, whether it's even if it's just a house, go get yourself a tax accountant. They know what to write off. The law changes every single day, and it's extremely important that you know about all the tax advantages that you can take advantage of, just like these big corporation millionaires do. Like what you saw was baffled me. And I know I'm going on this tangent here, but people used to get so upset at the fact that Amazon didn't pay taxes for years, or that Tesla didn't pay taxes for years, that Donald Trump didn't pay taxes for years. Well, they're not doing anything illegal. Like regardless of what the narrative is out there on these news channels, they're just taking advantage of the tax loopholes and tax codes that were put in by the politicians that are telling you that they're now going to tax corporate businesses 15% that are, I believe, over $1 billion, and then tax 0.1% for buybacks. And if you truly believe that that's going to happen, it's probably not. Majority of them are going to have some sort of loopholes or some sort of other discount or credit or something else where they're going to be able to avoid that 15% corporate minimum tax that they're going to try to charge. Trust me on that. Just I think that's like me. If I'm a billionaire, why would I vote on something that's going to hurt me personally? I mean, we're America is a capitalistic country. They're not going to do that. So I know I'm ranting here. What do you think, Mo? You have any input on this?
Well, a lot of people think, middle class, you're not, government's not going to get much out of it, but a lot of people don't understand. Only 8% of people in America actually make over 400K. The other 92% does fall in middle class or upper middle class. So you might not have big quantity, but the amount of people that are there makes up for that. And then, like you said, Mark, let's say I'm getting penalized for $4,000. At some point, it might not be worth it going to a lawyer who charges $400 or $700 an hour. Might take him 4 to 5 hours to actually go through it. So there might have, and then your time and stress. So most people would just pay it, right? On the other hand, if it's, let's say, it's a corporation and it's 100, 200K, then it's worth going to an accountant and paying $4,000 or $5,000 to look at it. So the government's pretty strategic too. It's like the ROI. Where do you get the most ROI from? It's the middle class people.
Yep. Yep. So be careful at that. I really recommend it. Seriously, find a tax accountant. I know they're kind of expensive. Like my tax accountant, I think this year I paid $750 for him to do my taxes, but he gets me back a lot of money. And again, I have businesses and stuff, but I've been using a tax accountant for about 10 years. I have been audited twice. I did fight it and I won. So that's why I'm saying, so just be very careful. Just because they send you a bill and it says it's a proposal, that's exactly what it is. It's just a proposal. That's it. That's it. And then you'd be surprised. If you have a tax account, you can go to them with that and they can probably help you get out of whatever bind that you need. But of course, everything needs to be legitimate. Make sure you have your paperwork in hand. I know everyone out there has been getting LLCs just to have an LLC. Actually have a business attached to that LLC. That's just a word of advice. I've seen some of these ridiculous groups out there where they bring on these so-called experts and they're telling you just to go get an LLC. You don't really need a business or nonprofit. Be careful. You're getting caught up. Just like with the PPA loans, right? All those folks who are getting hit with it right now, right? Because there's all these gurus out there used to tell you, hey, if you don't have a business, get an LLC or get a business license. Now you get that PPA loan. Now look at you. Now you might get arrested. You might get audited. So much stuff is going to happen. So be careful what advice you're taking when it comes to these online gurus. Be very careful. But yeah, real quick back to the Inflation Reduction Act, the new clean electricity tax credit. Here is a list of vehicles that actually qualify for this tax credit, and we talked about that in the last episode as well. But just in case, like I said, my audio was in and out, kind of sucks. Sorry, but this is a list right now, the 2022 models that are going to likely qualify for this Inflation Reduction Act tax credit. But like we mentioned in the last episode, figure out if it's a tax credit or a tax. What was the other word I was looking for? It was a tax
Rebate.
credit rebate. Yeah, tax credit or tax rebate. So you need to figure out which is what because there is a major difference. But if you look here, the Teslas are not on the list as you can see, and there's a reason why because they already exceeded their tax break. But starting 2023, they're being on the list again supposedly. So we'll see what happens from there. But these are the vehicles that you can currently take advantage of when it comes to these tax rebates. But again, it's 7,500 on average for tax rebate, and most of these vehicles just raise their prices by a minimum of $10,000, which is complete BS. And Mo touched on that last time. Do you want to touch on that real quick again?
Yeah, so a lot of this is being done to kind of pump up the numbers too. For instance, they gave a $7,500 credit to Ford for their Ford 150, right? And Ford 150 actually increased their prices by $8,500. So really, you're now paying $1,000 more. So they're using that as leverage.
Yeah, which really sucks. And this is like with everything. That's like the same way when everyone wanted to always have like those stimulus checks and they want to have that like as a consistent thing where every single month you get a check by the government. What's going to happen? Corporations are just going to raise their prices. That's the reality of everything. You're not going to get a hookup. You got to be careful. Like it's just all just sweet talk to finesse you into believing that this bill is going to help the economy and etc. And reality, it's really not. It's just a way to finesse you into believing that this is a great bill because even if you look at the Inflation Reduction Act bill, it's basically just a repurposed Green New Deal bill. That's really what it is. If you look into it, it's ridiculous. So on to the next topic is Warner Brothers. Have you been looking at this stock at all, Mo?
No, man. Is it investing or trading?
This is going to be investing because I don't think that it has enough volume to even be worth trading right now. But I want to touch on this real quick because I noticed a lot of people on Twitter. People seem to be excited about Warner Brothers splitting from AT&T, which I was initially. I've been eyeing Warner Brothers for a while. I like HBO Max. It's currently the third highest streaming service here in America. It's well Disney now. Disney overtook Netflix, and then Netflix and now HBO Max. But they had a new CEO that came in, and it ruffled some feathers, man. And I'm a nerd. This is a little bit in the entertainment space and the nerdy space, but they had completely shot the Batgirl movie and a Scooby Dooby Doo sequel to the anime movie that they had in 2020, and they scrapped it completely. It's not coming out. They're gonna. It was completely finished, by the way. So it was supposed to come out this year. They scrapped it, and they're gonna take that $70 to $90 million loss as a tax write-off. And then the new CEO came forward and said, "Hey guys, we're not going to focus too much on HBO Max, the streaming services. We're going to focus more on blockbuster movies." And because AT&T was so heavy on debt with the Warner Brothers and all those other mergers that they had, they made a lot of bad business decisions in the past. So it was a good idea for them to split. So AT&T would just focus on communication, and HBO or Warner Brothers would focus on entertainment side of things when it comes to their catalog, HBO Max, movies, and etc. Problem is that this CEO is coming in, and it's not really a problem, but he's making a lot of cutbacks, and I think he's doing this so the next earnings will reflect that they're starting to get into the positive, right? But they're making so many cutbacks that after a while, I'm starting to question like what's going to happen with this whole brand. It's smart, yeah. The stock was up at one point. It did decline significantly. I am eyeing it as an investor because it is the third best streaming service that's out there. I really love HBO Max. I think they have great content. They have a whole catalog full of their HBO content. Game of Thrones is back, so that just knocked it out the park. I mean, the viewership was insane on Sunday to the point where the app actually crashed because so many people want to watch a new Game of Thrones. But there's a lot of awesome stuff that's happening with HBO Max. However, the CEO is just making cutbacks after cutbacks. Anyways, point being, long-winded, they made some additional cuts. Again, some more cuts are happening right now. They've been cutting back on a lot of the children's content. I know they own Sesame Street, so they cut back a lot of that. I don't know if they're planning on licensing it out somewhere. If they do, I think it would be a good way for them to start increasing their revenue. They could maybe license it to Netflix, which is really dying for original content right now. And if they can maybe obtain Sesame Street, I think it would help Netflix on the kids side of things. on the kids content because Disney's just killing it, and they're just making more and more cutbacks as well as they slash 40% of their workforce. I mean, the dude is literally scrapping so much stuff. He's like cutting the fat, and as an investor, that's good to hear, right? Because you're like, all right, they're minimizing their debt and they're looking forward, but listening to this CEO, I have two issues with it, right? He wants to focus on theater and blockbuster films, which is a good idea, but at the same time, the streaming service, I think, is really where it's at. Disney also pivoted during the pandemic when their parks were closed. They pivoted to their Disney Plus, and they did really, really well in that space. And I feel like HBO has enough original content for them to kind of do the same thing, as well as they have the the DC licenses. They have the Bugs Bunny licenses. They have so many licenses that they couldn't really do something with HBO Max. But this CEO was all about making sure that movies hit theaters. So maybe he's thinking that we could put the movie in theaters, it could make money there for about 4 weeks, and then it could potentially go on HBO Max exclusively for a certain amount of time, and they could make money off of that as well. But who knows? I just feel like they're making a lot of cuts that is making me a little bit nervous, like where HBO Max is going to go here in the future, and that's the reason why I haven't invested yet. Now, obviously, if it goes to $10, I may cop a few shares here and there. What's your thoughts on this CEO making all these massive cutbacks?
I guess entertainment industry is doing really well. Like people, like especially summer's getting over, so a lot of people will get into like just watching shows and stuff. So typically stocks do really well. In terms of trading, it might be a buy. Like, but once we get into the Jackson Hole and a couple other things, personally, again, cash is a position for me, and I'm getting pretty close to starting to buy. Not just yet. I'd give it what we're in August, around
Hmm.
October end. I'm gonna start buying with starters and then start adding on. But um, again, what's your angle? 10 years? Maybe it's a good company, right?
Yeah.
My growth, my goal is to look at cybersecurity. That's where I want to put in the money. I think, and that's why you guys probably get annoyed of me talking about stocks like Net. Um, I think there's a lot of growth potential. This work from home culture, this freelancing is going to become the big deal. So people will need cybersecurity, but I'm rambling now, but I don't know much about this. So I'm just cash for now.
Yeah. All right. Man, I appreciate it. I know. Do you feel like Netflix is still going to be a major player moving forward?
I honestly think that TikTok might change the way we view content because I don't know if you've noticed, even your kids now their span of like just watching anything isn't longer than 15 to 30 seconds. Like, I don't know if you know this, YouTube actually redirects people on TikTok. I don't know how they do this, but there's like little mini clips, and then you could watch it there, or it actually redirects you to TikTok. My son's done it a couple of times now, and he's like 4 or 5. It's because you get excited for 10, 15 seconds, and then there's something else. But when you're
Hmm.
watching a show, you don't get stimulated as much. So I think um, TikTok is impacting people the way they view content, not us so much like us, like we like shows, we like,
Hmm.
Game of Thrones, but the next generation, they're leaning more towards on shorter clips. Like even when I'm posting content, it's 30 to 45 seconds now. People don't want to know anything for more than 45 seconds. It's like, okay, what's next? What's new? So I think uh, eventually Netflix and Disney aren't going to do well in terms of just pure content because there's other platforms that are not paying their content creator to create content, whereas Netflix is putting so much money. Like you've heard of the guy named Mr. Beast?
Yeah, of course.
Crazy, right? He's just like does weird shit, and people are like I saw a clip where he told someone that 20 people put your hand on the Ferrari, whoever holds it for the longest takes. I haven't watched the whole thing. Like it's like it makes no sense. Like, right, people are watching that over watching a good show or something because it's instant gratification. Like you came across it and now you're like stuck watching it.
Yeah. Now, I would say I disagree with you on that one. I don't think TikTok is going to take over or that sort of short format is going to take over long term. Actually, in fact, I think that TikTok may not be around 3 to 4 years from now from the whole security issues with China and everything else. So it just, I guess, depends which president is sitting in his seat here in the next couple of years. So we'll see. But I mean, I could be completely wrong because, especially with the streaming service stuff, I still like long format content. I don't like that quick adrenaline hit real quick. That's not my thing. I like to watch actual good content. But then again, I was also the guy who was screaming that VHS are never going to go away and that DVDs is nothing special about DVDs. And what ended up happening, DVDs took over and then Blu-ray took over DVDs, and I was wrong about that as well. And now streaming services took over Blu-ray, so it is what it is. So we'll see. But yeah, man, Mo. On to the next hot take is the 4300 Spy. What happened, Mo? It hit 4300. It did not hold, and then yesterday was a brutal, brutal sell-off. When I say brutal, it was like everything was like 2% right down. S&P, Dow, Nasdaq, I think was the worst. It was almost 3%. What's your thoughts on that?
Well, this was very expected. That's what I said. It was pretty planned, and I'll explain you. If you don't want to get too complicated, just start adding moving averages on your chart. So, and when I say on your chart, time frame matters. So, daily matters. So, let me just quickly share my screen here. I would rather show you guys what I'm talking about. All right. So we are on daily here. Let's clean the chart. Let's add. So the first moving average I'm going to add is 200, and you're going to see that's exactly where we rejected.
Mm-hmm. Which happened to be 4,300, right? Around 4,300.
4324 exact to the dot is where we rejected. The next one is what I'm watching at. It is 100, which is our next spot, which I'll give you guys exactly. Again, this is moving average, so we're going to be off a little bit here. 4085 is the next number. And if you want to give, if you want me to give you the next one, that is 50. That gives us 3973 is what I'm looking at. So basically, we looked at two numbers, and we talked about it last week too. And the two numbers was the 50% retracement on SPX, which was 4331. And then we looked at the 200, which was 43, in this case, what is it? 4330. Both cases, we touched it and we failed. Since 1950 all the way till now, we've never, ever not gone up after this level. So anytime we've retraced over 50%, we always say bear rallies are over. But if you look beyond 1950, there's been 3 occasions where we came all the way to 50 percentile and then we went like down. That's what I think is going to happen here. The whole thing with Monday, it's very simple. We've got a Jackson Hole meeting coming on Friday, which is a very key event. Whatever Powell talks about will be held till probably another year. And a lot of people don't want to be holding all these gains that they've had in the last month. So they were just selling off before that. So Monday was a big sell-off. And I'm not just saying that. Mark, I don't know if you're in the Discord. We actually swung puts. And the simple logic, this is simple. It's not fucking rocket science. If Friday is red, there's an 80% chance Monday will be red. If Friday is green, there's an 80% chance Monday will be green. Out of the last, I would say 12 Fridays, this was the first Friday that was really red. So we expected Monday to be red, just plain logic. And then we knew Friday macro level Jackson Hole meetings coming. Now today was consolidation, because when you have a 3% move on SPX, the next day the market's just absorbing that move. I think we could see more range on Wednesday, Thursday. Friday is what you get the real meat of the move. The way you want to look at this is a lot of people are thinking that the Fed's pivoted. Fed hasn't said anything about pivot. So this rally has been very technical, right?
But what do you mean pivot? They're thinking he's pivoting to be more bullish?
No. In terms of action, what pivot means is they've changed their tune in the sense that they're not going to do quantitative tightening. They won't do the interest rate increase. They've been doing the interest rate increase, but we are okay with it. Now, it's kind of like the COVID thing. When it first happened, we would all freak out. Market would go down. After that, it became normal. They'd be like, oh, COVID getting bad, people wouldn't care. The stocks would rally. We're at that point where we're eating up these interest increases like it's nothing. But once they start talking about quantitative tightening, that's what's going to impact the bond market. Once the bond market gets impacted, that's when the stock market. Look, we follow the bond market. I'm not the expert at bond market, but everything I've studied, we follow the bond market, and bond market gets impacted heavily by QT, not by increase in interest rate. So that's what's going to get you the big drop if you are a bear. One thing I'll tell you, I've done this a couple of times where you get in early. If you're early, you're still wrong. Meaning, if you're just front running puts since last month, you probably have no cash left now. So just stay out. Like you tried shorting it once, it didn't work out. You can either play with the trend or just chill. If you're like, I don't see any reason why we're up, you're most likely going to start shorting the rally and get blown up. So you're like that, just stay out. Just say the macro wise, this doesn't make sense to me. I'll stay out. But this is a very hard market to play, no matter what anyone says. And a lot of people are getting bagged, and then they get more stressed when Friday shows up because then they want to make up for the rest of the losses they've done. And they're just wiping their savings out. In a time like this where recession hasn't even started, people are making some crucial mistakes. And again, Mark, we've talked about this, the whole marketing gimmick. 2,000% gain, 3,000% gain on a Friday. How often does that happen? Now, there's every day there's one ticker that does 1,000%. It's really easy for me to pull the premium high and low and just post it on Twitter, right? So it's sad. Like yesterday, the SPX, we had the 4,200 put, no joke. We got in at 9:30. It opened at 30. First thing I did, Mark, I took profits. First thing, I don't give a fuck how high it's going to go. I only had one contract. I'm taking profit. Then I rolled and that made money. I kept selling. So the 4,200 went from 30 to 65.
Ooh.
So if you swung, it went from 930 to 65. Now, let me ask you something. Should I tell people that I made 930 to 65 or did I make 930 to 30? What's my profit? Where I execute, right?
Yeah, where you executed that, not where it could have went.
Yeah, the moment I left, it's over for me. I can't tell you that it went to 65 when I sold at 30. That's what people aren't understanding. You can roll and then that's fine, but 30 is where my game ended. It didn't end at 60. And I saw people in my own chat saying, "Oh fuck, I could have held it longer." And it's going to be a very painful lesson for a lot of people. That thought where you're not grateful for what you've made, you're pissed off what you left. It's life too.
Yeah, dude, profit is profit, regardless. Yeah. Profit is profit. A strategy that I've been adopting, if I get into a trade and I exit out and I'm in profit, I don't go back. I take it off. I don't pay attention to it anymore for the rest of the day because I don't want to go back and have that same feeling of oh man, had I just held a little bit longer, could have went here. I hate that feeling. I should just be happy with the fact that I didn't lose and that I made profit because profit is profit. So I wouldn't stress it too much. But going back to the Jackson Hole and the fact that people are thinking that Jerome Powell is going to pivot, I'm assuming these ideas of him pivoting is potentially due to the fact that the election's coming up, right? And they're thinking that he's maybe being very strategic with the wording and stuff. So it kind of gives the Democrats an edge to possibly get reelected. Is that maybe what you're talking about, where people are saying that he's going to pivot, that he might be careful in his wording and stuff, so it doesn't come across like we're going to have some sort of hard landing or anything like that?
More so, all the buying has been happening because there's two kinds of buying. There's funds buying and then there's retail buying. Funds aren't buying because they think Powell, they're not stupid. Funds are buying because they have a quota to hit at the end of the year. If the moment SPX goes positive, they need to make sure they can match equal return. So just so you know, Mark, in terms of number, in January till all the way March, whatever we've sold the funds, they've only bought back 20%. Retail is buying thinking that Fed's pivoted, and they think that they will announce on Friday. In my opinion, Powell most likely is going to be vague about what he's going to do. He's probably going to say we have all the tools needed to fucking control inflation, whatever. But I don't think he shows his hand before elections.
Yeah, speaking of retail investor, you're absolutely right. It's funny because we covered MeetKevin before, which is a heavy YouTube influencer in a financial literacy space. It's got like over close to 2 million followers and subscribers, and that guy, man, he went and essentially started talking about his buying again. He's like, I'm all in. I'm still gonna start buying. This is, I think, last week or the week before.
Are
My
you
my
serious?
homie, yeah,
Last
dude,
week?
yeah, I think it was last week or the week before. My homie echoes from above. I mean, he keeps his boot on that guy's throat. But he did a whole video about it and showed it. Yeah, he's like, I'm buying, guys. I'm buying. I'm starting to buy Tesla. I'm starting to do this. And he was buying a bunch of shares and stuff. And again, remember, this is a dude who has close to 2 million subscribers. What do you think his subscribers think? Oh, the bear market's over. It's time to start buying as well. And then look what happened. Whatever you bought last week, or the week before, I'm pretty sure you're down. I'm pretty sure you're down. There's no ifs or buts about it. It's very likely that you are down. Be careful who you listen to on YouTube.
Mark, my problem isn't people buying it. My problem is a lot of people that aren't qualified to buy are buying, and I don't want to get into the rant. It's people that should be investing money in themselves, learn an income skill
Yeah, I
rather
remember
than
seeing
like
that. Yeah.
whatever little money they have. I don't think there's I wouldn't buy Tesla here, but I don't think there's anything to wrong to buy. Let's give a coin you want to buy, a net you want to buy. Because in January, if you're buying it versus now, I'm okay with it because we take like right. That's where I'm getting at. Like you're gonna hold it for 5 to 10 years, I'm cool with it. But in terms of logic, it just doesn't make sense telling everyone that they have to buy. At some point, they need to. Maybe not now.
All right. Yeah. Just be careful, and because literally, like, why were you buying Apple at 170 right now, knowing that it was like 5% away from its all-time high? That just it wasn't smart. But it is what it is. What can you do, right? Had the market continued to go up, we would maybe be here with a different tune. I mean, I don't think we would have. We actually probably stayed the same until October is probably over, and if the rally just continued, I would start questioning a lot of stuff. But yeah, that's pretty much all we got when it comes to the hot takes. Is there anything else you want to cover, Mo?
Nope, I think we're good.
All right, man. So let's get into what's in our lunchbox. That's the last part of the show. I think we're doing actually pretty decent time for once, a little over the 30 minutes. But do you want to start off, Mo? What's in your lunchbox, or when we
Yeah,
start off?
I'll tell you what. We've done this 4 weeks now, and every single play is done minimum 100%. The Roblox play is officially up 150%. Um, the goal is to give you plays that are chill to play like a month out or something, not like a weekly play where you're panicking. So that Roblox play went from $1.24 to now the high was 3. I sold at 250, so I still hold runners, but I want to be honest and not give you the highest premium. But you executed where you did. Um, I can't technically say that all the plays will do amazing. These are my plays. That's how I kind of do them. But the ones that I am sharing here, they are the highest probability play. If I don't think I have anything remotely high probability, I will not share it. Like I think was 2 weeks ago, I said I don't have
No, it was
anything.
last week. I think it
Last
was
week,
last week.
I don't
Yeah.
have anything because I know that I'm not there to give comments about things changing. So all right, so I'll get to the point. Let's go here. How do I get the graph going? The screen going? Thank
There
you.
you go.
So the ticker is WET, and I'm not going to get into the fundamentals of it. We're just going to solely play this technical. This broke out today, the range. What I'm looking at is I'm looking at a $9 call for October. There's only one for October monthly. I'm looking for that. It's 40 cents. So this is like a small account darling. This thing can get squeezed heavy. It's basically wintertime. This stock does really, really well. So, and it's breaking out. So I've got the pattern recognition going, and it broke the trend line, and it's got 3 candles. So you could see the buying pressure. This thing in May went as high as 1242. I don't want to cause FOMO. I can expect us breaking all-time high like Oxy doing, or Energy. Like, keep an eye on Energy Solar. But if we're talking about a specific ticker, 40 cents, the way I would play it, small account, let's say 5 for 200, easily could do anywhere from 200 to a 500% on this play. But that's my play, Mark.
All right, cool. We're gonna definitely revisit this here in the future to see how this whole played out. Now, when it comes to the investing side of things, there's not much. I don't have anything I really want to shout out or talk about. The only things that I did this week, because I buy a couple of shares, and when I say a couple, just so you guys understand, is that I get like maybe a share here. 5 shares here, 10 shares here. Nothing major because, again, of the macro and microeconomics that we're currently in. I'm not going in and buying anything heavy yet. So what I currently have, and I can pull up my chart here. I'm down on some of the stuff that I bought recently. And like I said, like Mo said, if you were buying some of these growth stocks back in January, you're hurting, right? A lot of them are down 60 to 80, 90% on some of them. So I have no problem scaling on some of them like I did with Shopify and Match.com, right? I really do like Match for long-term purposes. Shopify, it's more like a short-term, long-term play for me, meaning like maybe I'll hold it probably for like a year or two and profit from it. Match, I'll probably hold on a little bit longer until the sentiment changes and I see people actually dating and meeting in person. Until then, I don't believe in it. But what I did buy, and you guys will be shocked because this is a stock that I used to always shit on until it had its recent earnings, is SoFi. I'm trying to do cover calls on SoFi. I bought 50 shares. I waited for it to hit $6.66, and that's when I bought my first 50 shares. I'm waiting for it to dip below $6, and then I'm going to buy 50 more shares in the $5 range, and then I'm going to use cover calls for it. That's the reason why I got SoFi. And then today I went and I bought a total of 100 shares now of Norwegian Cruise Lines. I actually started buying that a while back. I bought it when the earnings happened and it dipped all the way down to $11.90 some cents. I bought the first 40 shares, I believe it was 40 shares. And then the next day it skyrocketed up like 5-8% or something like that. So I didn't buy and I waited for it to dip. Yesterday it dipped a lot more today. So I finished up and I got my 100 shares with my average cost basis at $12.50. I sold a call for $13 call that expires this Friday. So if it doesn't get called away, if it doesn't hit $13 and it doesn't get called away, I will profit that premium, and I'm just going to rinse and repeat this until I completely sell and get these stocks called away. So that's the only thing I'm doing right now. I'm not looking into buying anything else except just averaging down on like my Apple plays, my AMD, Berkshire Hathaway, Microsoft. Roblox, I've been buying every once in a while, buy like a share here or there. Speaking of that, by the way, Mo, that play did work out. I did have a put on Roblox and I had a put on Shopify. The reason why I was doing these puts because I have money invested in the shares, like enough that a little over $1,000. So if it's over $1,000, I feel like it's my duty to start putting insurance on some of these companies that I believe have an opportunity to 2x in shares alone. And seeing that Roblox ran for weeks on end, you and I were talking about that. It started dipping, and I did get a put, and I sold the put today. And I think I got about 60% on the put that I had. Mine was for $35, I think, is what I had, not the $40 one that you called out. And then Shopify, I exited today at 100%. So because it started going back up, I exited that, and I will revisit it this week to see like what's happening because I know everything's going to be moving sideways. I want to take profit, and I'll probably re-enter puts for some of the other shares and stocks that I have. But that's pretty much it. Yeah, that's all I got. That's all I got, y'all. So not buying anything different besides what I have and just averaging down. So that was it. Any questions, Mo?
No, I'm good, man.
All right. So everybody, what are you guys buying? Are you guys buying anything? Are you just stacking up cash? Or did you participate in that Roblox play that Mo talked about, a week or 2 or 3 weeks ago? Did you make money off of it? If you did, make sure you guys comment below. Let us know. Let us know if you enjoy the lunchbox episode or if you would like us to also incorporate levels to buy at. Because remember, I used to do that in the beginning phases of this episode, but it seems like everyone was asking for the same stocks over and over, which Apple, Microsoft, they don't really change after you speak about them. But if you guys want us to bring that back, let us know. We can cover that as well. So until next week, everybody, my name is Mark. You can find me on Instagram at Trading with a Dummy. I do not sell courses. I will never hit you up and say, hey, how's your investing or trading going? Or I have this great opportunity where you can 5x something. It's not me. There's a lot of spam accounts out there. I understand why, because I call out some of these furus, and I'm sure there are fanboys or whatever spoof my account. But that's where you guys can find me. And of course, I have a YouTube channel called Trading with a Dummy. I haven't really delivered any new content that's amazing yet. I am coming back. I am really excited. I think you guys are going to like the way I pivoted to this new format and content that I'm going to be delivering. Mo, where can they find you?
So you can find me on OTB Clubhouse on Instagram and then OTB Shark Mo on Twitter. But yeah, make sure you guys are following our Instagram on for Money Market Truths as well. Our goal is to focus more plays and kind of do charts that you want to do, because I know you want to make money. And a lot of people on the DMs are saying, what's the free game you can give us? Well, this is the free game. He told you what he's doing on the covered games. I'm giving you specific plays with specific chain, and we're going to go over this every week. So let's say the trade doesn't do well. You bet we're going to talk about and what went wrong. So someone won't be like, oh, we lost it, so let's not make sure we don't talk about it. Everything will be transparent.
Yeah, and more, I might actually get into that play that you just talked about too, because that looks pretty promising. You know how like swing plays that are out several months, that makes me a little bit more comfortable getting into those plays instead of short-term plays. But yeah, that was it, everyone. Once again, thank you so much for tuning in. Share, subscribe, and click that like button if you enjoyed this content. And seriously, y'all, write down in those comments. Let us know what you would like to see, and we will definitely add this to the show. Until next week, everybody, peace out.